It is time for the word on Wall Street. Top investors watching your money this morning. Joining me now, Michael Lee Strategy founder, Michael Lee, and Walser Wealth Management President, Rebecca Walser. Guys, it's great to have you both here. Rebecca, let's start kind of with where we're at now. You know, we're looking to 2023, and a lot of investors are looking at this last trading week of 2022, and it's been disappointing to say the least. So where do we go in 2023? When do you think we're going to finally see the market start to recover, or are you concerned about another recession?
Yeah, Cheryl, no Santa Claus rally this year, it looks like, unfortunately, more of a little bit of a nightmare. You know, I just think that people are expecting, and we all are sort of leery of this long slog, down, up, and really to the downside, obviously, overall for the year. And I think investors are getting really impatient, and because we think that it should be over, it just needs to be over. But that's not how the world works. And I think we have a lot of factors beyond just the micro this time, Cheryl. There's so much macro going on globally that is affecting the Federal Reserve, that is affecting the strength of the dollar. And so investors should prepare for things to pick up on rockiness, because we are starting to see the macroeconomic factors really come to the forefront. So we are expecting that 2023 will start off with quite a bit of issues. And I do eventually see us hopefully going to the upside, but it is going to be a little bit longer time here.
All right. Well, hopefully we'd like to see, I know that there's calls about another recession, Q2 2023. We shall see. Mike, let's switch gears. I want to talk to you about Disney. Disney's had quite a year. There's this new study that shows that families are going into debt because they're visiting Disney theme parks. The stock hit its lowest closing number since October of 2014. It's down about 46% this year. Now, Bob Iger is back in charge at Disney. Do you have faith that he can turn around the ship?
No. No. Look, the entirety of Disney's revenue growth was up 9% year over year, came from the parks. I'd imagine as the economy continues to slow, that will slow down. But there are massive structural issues with Disney. The first is the streaming wars. So Disney, you would think, would be a winner, but with all the other streaming competitors out there, their customer churn is a lot higher than you would imagine, and they're losing traditional cable customers, which has been a trend for almost a decade now. And so for a company whose previous cash register was ESPN, that business is in decline. As sports content is getting more and more expensive, it's my belief that Bob Iger was brought in to slice and dice the company and sell off some of the sacred cows like ESPN. I think it's a franchise. It's not going away. But for this business to turn around to where you're going to have some great stock performance, I think a lot of things need to change. But there are tons of headwinds facing Disney right now.
And you know what, Rebecca? The Disney story, I think, is what we're going to see play out at a lot of other companies. I mean, we've talked a lot about Southwest Airlines today. I'm thinking we're going to get another boomerang CEO story with Southwest like we did with Disney, which is, the stock falters, operations fall apart, employees are unhappy, and then all of a sudden, Gary Kelly, who used to run Southwest, comes back. And that's what, Bob Iger has done. At the same time, this becomes a story for 2023, is that you might see more restructuring with a lot of the big names that we follow in the markets.
Yeah, I think that, the cost of capital has been so cheap for so long that businesses really enjoyed the ability and the breadth to just sort of expand and grow potentially into business lines that they thought might take more years of work to really get to be profitable. But now that the market is retrenching, those profit lines are not, the cost centers, if you will, are going to be looked at. And it is a problem, just like Mike was saying, with turnover and all the competition is really coming to a head. There's so much segmentation now that it is very hard to be a market leader in almost anything that you do based on the breadth of competition through technology. Cheryl, so these things are going to be looked at a lot more closely, and maybe where we would take on a capital project or an expansion or a merger and acquisition of a new division that was really sort of outside of the lines of their normal business realm will continue. So Southwest is dealing with, Southwest has just had such a bad holiday track record, and they get tons of funding for the government. They have what they need, but, we have a pilot problem. So there's a lot of issues that have to be addressed with 2023.
Yeah. Mike, last word?
Yeah, look, I think the first 6 to 9 months are going to be really ugly for next year. But at some point in there, inflation will die, and the Fed will pivot, and markets will take off for another massive bull run that'll be multi-years long. It's just a matter of staying alive from now until then.
Yeah, and maybe, the old adage, I keep saying this, buy low, sell high. I mean, if you've got a longer time frame, then maybe 2023 is where you kind of start to, reconfigure your portfolio, rebalance, and look around for, some maybe Disney's a buy in 2023. I don't know. We'll see. Not my job to say that, but I'm throwing that question out there. All right, Mike, Rebecca, it's great to see you both. Happy New Year, guys.
Happy New Year.
Happy New Year, Cheryl.
All right.